Hello and welcome you to another video. In this video we'll make, as you can see on the slide, is the Disney. The Disney stock, which the ticker name is DIS. And myself is Pramod Kumar. I am a CFA charter holder and FRM certified. Those who are new to my channel, I basically perform the fundamental analysis of the stocks, try to basically go over its 10K, 10Q, some of the economics to see how it's behave and how it will try to see how it will perform in the long term perspective, right? So either is suitable for our portfolio. Basically, just put my opinion, and it's for fun and education purpose. So I have performed some other videos as well, like Apple, Nike. You can check the playlist on my stocks, and if you like it, I request to kindly subscribe if you're new, or like and share the video, because that's how Google will know. Okay, so that's enough as a start. So Disney. Okay, so what is Disney? Disney is basically, I thought Disney may be a theme park, or Disney has movies, and Disney is what? So when I looked into the company, I'm sure you will get amazed that how deep its root is. Honestly, 4, 5 pages, 6 pages I was going through. It's very, very deep, because Disney is growing through acquisitions. So let's get started. And I am sure when I'll go to the company overview, I'll just put the high level overview on the company fact, but I'll give you some good fact, and I'm thinking that maybe some of the facts on the company side, I don't think so. Not many people know it. Maybe the people who has young kids like I do. So we watch Disney movies, and for sure, maybe most of the people have went to their theme parks and all. But what other they have, right? So I'll try to emphasize some on the high fact as well. I don't go into very detail, because the more focus on his channel is to go on the fundamentals, and on the the financial statement, like cash flow, income statement, and right, and the balance sheet, but not as the boring way, but to try to get the gems out of it, or the key aspect of it, so we can form and make the opinion. Okay, so the agenda is, as you can see on the screen, I have Disney company overview, some alarming facts about the Disney. Then we go deep into the financial, free cash flow, revenue diversifications. This is huge in terms of the company, how the company is growing, and by acquisitions and all. And then we try to compare in the end some Netflix and Disney streaming, and then I'll try to form my opinion on that. Okay, so that's the overall high level agenda. So I hope this is one of the ticker somebody on my YouTube channel requested as well. So that was on my list. So, and also I'm also interested. At the moment I don't own it, just to make it clear. But let's see whether it's a good buy or not buy. So let's keep the suspense open. Okay, so we'll go step by steps as usual, and let me start working on it. Okay, so what is Disney? Okay, let's get started. Okay, so Disney business, as you can see, it's grouped into the major 4 business segments. The first one is the media network, and then the parks, studio entertainments, and the direct to consumer and international, right? So these are the 4 major groups of the Disney. Their company, as of September 2019, 223,000 people employed. So they have these many employees. That's a very big number of employment, honestly speaking. And this is a pretty old company as well, right? If you remember, I grew up watching the Disney cartoon, right? With the mouse, Walt Disney, right? So that was my favorite show right? So the mouse is running and the cat is running and all, right? But now they're grown up a lot. Okay, so on the further, if you so let's come to here. So on the media network side, they have a Disney for sure, their own brand, but they also own ESPN, National Geographical Channel, and so on. Okay, so this is they have more other channel as well, like FX and all, but these are the main one I highlighted. But things won't stop here, right? So for example, you in Canada we know CTTV is very popular, and do you know who Disney has a stake in CTTV as well? Like how? It's an indirectly ownership. So for example, Disney owns ESPN, and ESPN owns some stakes in I think it's 30% stake in CTV, not fully, but still is a major chunk out there. Okay, so on the park side, okay, they have a cruise line, resorts, theme park. I think that's quite famous, and that's a major chunk of their business as well, right? Which we'll see in the later financial slides. Studio entertainment, I think, is okay. Streaming services, recently they have launched Disney Plus, which on the streaming side, and they also have some ownership in the Hulu, which I will let you know. So what's next? Okay, so let's see. On the alarming facts on the Disney is, okay, they acquired the 21st Century Fox company in 2019, okay, and rename it to TFCF. So that's a major chunk there's a major acquisitions, basically what's happened. So what happened after this acquisitions, right? So when I was analyzing their the income statement or balance sheet, I do see quite a dip in terms of their cash flow and all, which is normal, because if you are acquiring that, so your money, so basically then you're paying something, right, in terms of the shares, in terms of some cash, and you'll see some dilution in terms of the liquidity, right? So I just want to set the mindset here up front, right, when I see that. So therefore, when I see this kind of a dip, so what I did, I perform not only this time the 5-year the comparisons, but then also look, okay, let's me look into the more quarterly, because quarter they're like a Q2 result comparing with the last 2019 quarter 2, and then first 6 months of 2020 to the 2019's first 6 months, just like we did some of the financial sector as well, like a similar style to see, because the main idea is to see how much if their business is down or business is lost, how much or what's the percentage of the revenue is coming from, where it's coming, right? Okay, so the launch of the Disney Plus is a very good success, and but how good it is, right, that's the question mark. Is it good with the Netflix, right? Because recently I also did a Netflix video, and Netflix is a streaming which is one of the FANG alphabet, right, in N. If you haven't watched that video, please go and you can try to watch after this. I'll try to put a link, but if not, then you can search my playlist with Netflix, and you'll find it. I just finished that Netflix day for yesterday. Okay, so we'll compare that, the Disney with the Netflix as well, right? And I see some of the fact there. Okay, Hulu is another kind of a streaming. I never use it, but it's quite popular. So what happened before? Disney has only 30 or 33% stakes in Hulu, but after acquisition of 21st Century, their stakes increased to 60%. That's a huge jump, right? In terms of the streaming, in terms of streaming and digitalized content coming directly to consumer, right? Which comes under direct to consumer, right, channel. So basically, they're trying to cut the middleman. What I'm trying to see here, right? Rather than selling their content to third party and squeeze their margin, they're going direct to the consumer, which is the pretty good and the future driven business plan, right? Because future mostly people wants to subscribe to like these kind of services and get it. Okay, so at least that's what my thought here. And let's see, Another thing I find is Tata Sky. What is Tata Sky, right? Tata Sky is one of the major player in India, right, in terms of as you can see, and they also own 30% ownership in Tata Sky. So this means not only in streaming, but they are also planning to grow in India as well. And then from the third party, they are selling, like I haven't put it here, like Hotstar and some other. There's so many distribution going on, so there is a no end to it. But if I'll put that, I think I need at least 2-3 hours to just put and say about the company profile, right? But this is which I only put it some of the alarming fact which surprised me as well, right? So that's it, right? Okay. The another one is this is Wise Group. Wise Groups is they make documentary and all, so they own the 21% share is in that one as well. This one is Endemol's Shine Group. They own 50% as well. Okay, now what is this? So when I think I was not quite know this group, but let me tell you, let's go to their website, right? Okay, now I'm on their company website and this is the company website I just Google it. So what they does, basically they create world-class content, as they claim, that entertains and thrills billions of people around the world. So for billions of people they are doing it. That's what they're saying. 120 production level, local and globally. So and they have some something. Okay, let's go here, and then they say this is maybe most of the show may be made by them. You might know, right? So Annual Shine Travels format originate from 12 countries, right, including super brand non-scripted hit Master Chef. Look at these shows, right? They have a big brand, Master Chef, Big Brother, right? The famous show Deal or No Deals, Your Face. I don't know about this one. Maybe you know. Let me know. So they make quite a good. So it's not like a small company that's I trying to share. And if I click on their shows, right, which shows they have. So let's come. Seems like the internet is getting slow. So they have more shows there, like Ambulance, Back, Big Brother is very famous. Looks like some Indian screen going on there. Okay, and it's also, I think it's in and so on, right? So the idea to show here is this is another very good dimension what they have. Look at the Master Juniors, Lego making for kids. So they are rich in content. Oh, Mr. Bean as well. Okay, and so on. Okay, so let's get back. Okay, so this is another one. So they are in different segments, right? So really I like it about it. So not only they're making their for the movies and innovation in digitalizations or acquisitions, but they're making the right acquisitions to grow. So far looks good in terms of how diversified the company is, right? So not only the brick and mortar, the theme park, and they have a cruise lines and all, but they are also trying to grow on the digital side as well. So they balance it out. But does it balance out enough, right? Let's see, right? Okay, so now let's come to the financials. Okay, so now which is the cream. Okay, so this is their revenue from the 2015. You can see here to the 2019, and I have this revenue and net income here. So the revenue in 2015 is around 50 billion, and then it grows to around little shy over or close to 70 billion, right? 67 something I think it was. And then the net income what they have is little over 10 billion. Okay, maybe. Okay, so that's, but this is not we'll see the margin in the next slides, but it's good thing is it's not fluctuating. It's keep growing consistently on the net income side. So which one that's I like about it. Okay, so let's say from this one. So the cash flow operations and the net income. So this is another kind of a test I like to do. So if you notice from cash flow operations, this is huge and it's growing, right? You see it from 2015, 2016, 2017 it drops a little bit, and then 2018 it spike again. So look at the cash flow, right? It's huge in terms, it's over 14 billion here, right? and then it drops from little over 14 to shy to 6 billion. And we know why it's dropped, because they have a major acquisitions of that company, Fox company, right, which gives them the Hulu and other 30% stakes and some other big group, right? So that's the reason. Otherwise, if we remove that, it might be same here or grow up, right? That's what my expectation is. So let's get next. Okay, now this slide, what I'm trying to show here is the major returns, right, which any investor want to see. And honestly, this is quite good. So if you see from, this is the percentage and this is the years, again from 15 to 19. And this is from return on equity. Look at the return on equity, right? It's going from 17, 20, 25%, right? Jump. And of course, the earning will drop because they have purchased for 2019, right? But overall, it's quite good. It's in 2 digits and it's up, right? So 25, 30, and 25, and 17, and 15. So overall, I think it's 20%. So, and return on assets, whatever assets they have, they're doing good. And I expect this return on assets, because now they are more into the direct to consumer. This should spike up in the next year and so. Okay. This one, what I try to share is the PE and the price over book. Okay, the PE ratio, which is in blue, is 19, 16, 17, and then right now it's very over, right? Because for sure there are PE ratio is what, right? Just the price over earning, right? Over, for sure the price is down, but the earning is down as well, which is, so that's why it hit high. But overall, if you see from other aspect, I really like it, because I'm only paying, if let's say the last year or last to last year, right? We paying more in terms of the price over book, right? It's 3 times usually if you see from here to here, because this is more like a earning drop here because of the acquisitions in 2019. But if you see here from these 4 years, over 3 times, right? The stocks, their market value of that stock, right? But now is 3 times is only 2 times if we compare from 18 to 19, right? So think from that perspective. So 1 times cheaper the stock is available, right? Okay, so that's another plus point I think I'll see here. And for sure, if the stock is doing good, they have a growth, I won't see that is discounted or beaten, right, that much well. Okay, so these are the margin. Now we are in the more deep into the income statement margin, right? Look at the income statement margin here, over 40. I really like it, honestly. I don't recall, but I don't think look at here, right? So it's from 45, 49%, always 40, right? Over 45 is consistent, and for sure we know here is because of the buyback, little bit dip there, but and the operating margin, right, 30%. So that's what I really like about those good companies, right? So they have a strong margin. Or look at the bottom line as well, it's over 15 and 20, spike to 20%. And if the digital growth has happened, I assume I'll expect the next soon the spike after this, the coronavirus is gone, this will be a major spike here in terms of the margin. Okay, next come to the liquidity. In the liquidity side, we'll see this is the average. So the current ratio is basically they have enough capital, a little bit short if you see 0.9 in terms as compared to their assets. So it's not very good, but it's not that bad as well, right? Because they have, if you see the quick ratio is over -6. So because they have a lot of employees, lot of buildings and all, so that make it. But overall, if you see from their current assets, not that very diluted liquid, it's not bad. It's 20%. If you see overall, they managing in terms of cash, in average 23%. But if we include more account receivables and all, then it's completely they are managing that. Okay, so that's another good thing. I like it. So let's go. I want to now go to the deep into the revenue and see, okay, how the revenue is diversified in terms of their different business line, right? Okay, so here, as you will see this revenue, right, among the different country bases. Okay, so this is also very good to know that Disney revenue is not only coming from US or Canada, which is the major chunk of their business, but they also have a quite a fair amount of revenue is coming from Europe and from Asia Pacific and is from Latin America. And good thing about, if you, I really like it, usually if I notice in any other company, the revenue is mostly, if it's increasing in one area, but it's all decreasing in one area. But good thing I like about Disney, and if you notice, is look at here, right, from 2017 to 2019 or 18, it's keep increasing consistently, right, in all the continents or all the different side of the world, right. This is increasing, and from Latin America and other is almost is double, right. If you see from here, it's almost double, 16 to 32, right. Asia Pacific is doing pretty okay too. Europe is keep consistently increasing, right. And this is not only this is a revenue side, on the operating income side, it's increasing well. It's decreased in 2019, right, because they have merger, they buy back. But if you see from Europe and Asia Pacific is increased, but in the Latin America maybe seems like they're doing some investment there, so it was increase and decrease. Okay, but overall it's okay. So now let's look. So now I have looked from the revenue perspective, operating income perspective, from the different part of the world. I want to go more deeper into their business line and trying to see, okay, what's happening. Are they really making revenue in one side or other? Because they have 4 business segments, right? The direct customers, parks, themes, and 2 more business, right? Studios. So let's see what is happening in that. Okay, so this is the 10Q quarterly statement of the Disney, and it shows quite well and presented. So basically this is what it's doing here is the quarter ended, right. This is from March 2019 and May and last year compared to the 2020 this year, the quarter comparison. Okay, so, and this is the 6-month comparisons, okay, for the comparing from last year to this year. So we compare both side, quarterly or 6-month comparison, and see how things happen. And we know in 2020 is the major problems because of the coronavirus, right. So let's see what's happening here. So let's start with the quarter, right. This is the first quarter. So we see here in this quarter the revenue is increased to 28% in the media network side. Park side, as we know, their park get closed, right, but still is not, I expect them to be worse, right, like maybe in 1 billion or so, but it's like still is not that bad. It's only 10% of down. Studio entertainment, it's not grown that much, maybe because most of the employee working from home, they don't go to work, but still it increased, right. It's still 18%. It's not that bad. But look at, if nothing is as compared to, right. So, and this is a huge growth in terms of direct to consumer international, right. You see greater than 100%, right. You see here 4 billion to 1 billion, and we'll look into more deeper into each of the section as well. Okay, so on the this side, okay, on the operating income side, for sure it's reduced, right, because they have operating expenses, which is 58% reduced in terms of park, which is understood. I just highlighted it for you. Studio entertainment, of course, it's reduced, but it's 8%. And then the direct to consumer internationals is also, they have some loss going on there. Okay, But overall, if you see from the other side, the 6-month basis is not bad as well. It's 14 is increased. I was expecting honestly this to be reduced, but it's increased 26% if we compare for first 6 months. So this means their the bets on the is the bet on their digital like Disney Plus and direct Hulu and their last year acquisitions seems like from do you think it pays off, or this is more like a content, right? Because people are watching more content. But look at the growth here, right? In terms of first 6 months, it was only 2 billion and now it's 8 billion, 6 billion increase, right? So this is a huge potentials what I'm seeing right now. And honestly, what I'm seeing, feel, and I'm just speaking as is my opinion. And of course, everybody has their own opinions when they look at the data. But these are the fact, right? We are just reading the fact. And actually, and then what we are expecting from that. Okay, so the media network. So this is now we are going more deeper into it. So on the media network, again, it's saying, okay, it quarterly increased to 28%. Out of that, they further divide into the cable network and the broadcasting. And if I'll see, I'll have actually very happy that even not only the cable and broadcasting both are increasing. Both increased 17 and 49% in terms of both broadcastings, right? And the first 6 month basis is, you see the broadcasting is even better, right? 41 and 49 basis. So that's very good, which increased actually to 4.4 billion right here. And then operating income increased to 1.79 billion, 1% increase. So this goods, which they can able to increase that. Okay, then they have some saying on the park, maybe they are not doing well or they don't have much, so it's decreased, so which we already have seen upstairs. One more thing I want to show here, which is this one, right? Because this is the new business they have entered. Look at the falling number by the paid subscription. You see, this is the paid subscription. This is not like unpaid and all. So they have a paid, this includes their Disney, which is their recent launch, ESPN, which is their own Net Plus network, and the Hulu, right, which they own 60% of that. So look at the numbers, right, that represent the paid subscription. Is 33.5 million people is already subscribed, right? It was not even there. These are the number, right? These are not only there when in 2019, right? It cannot remember, it's just started. But how good it is, right? We'll see that as well. So when I compare with Netflix and other. So the total, it comes to 7.9 billion. And if I see the combined with Hulu, so it's 32.5. That's the total. And this is shows here. Again, now average monthly revenue paid average monthly revenue per paid subscriber, right? So average monthly revenue, what they're getting is 5.63, 4.24, and Hulu, I think Hulu, they are making pretty good actually here, right? So in Disney, I see on their website actually it's 8 point something on basics to start, is not that much. Let me double check, right, how much it was Disney. Let's double check Disney plus. Okay, oops, I think is yeah. So this is Disney Plus, and if you see the rates are not expensive, and you see it's only $9, $8.9, which is way good, right? If I compare with Netflix and all, I don't recall, I used to have, but that was not bad as well. But I think that's good they have. Okay, so that's it. So let's go to our slide back. Okay, so now let's see. I think this one is not coming. I didn't realize that, but but this is not that. I think this is pretty okay. I think I covered this. Okay, next go on the cash flow, right? So cash flow on the from the operation and the free cash flow is for sure the free cash flow because of the investment in the park resorts and other properties. So basically they did some more investments in the park and other properties which reduce the cash flow further, but their free cash flow, it was 3.6 billion in as of the first 6 month ended, right? 6 month ended, and now it's only 2.2. And for sure it makes sense because the business didn't operate, but still is pretty good in terms of the cash flow. Okay, so that's what it shows here, and I already have shown you in the earlier slide their trends on the liquidity on the current ratios and all, right? So okay, and revenue breakdown I think we already covered. Okay, this thing now what I am trying to show here is because of we have seen the major chunk of their asset, right? It's also coming from their theme parks, buildings and fixtures. So I was curious, what's their life out of there, right? So I got this, if the straight line depreciation. So straight line depreciation means if let's say you buy a computer, right, and it's cost $1,000 for example, right? And a straight line means you depreciate, take out, divide that by, if you assume that life of the machine is 5 years, and then you just divide that by 5, so it will give you 200. You do depreciation per year, right? So that's what basically it shows the historical cost, and that's give their, after doing their straight line, which is basically the even depreciations, it still have a good lifetime, right? You see from some are from the furnitures are 3 to 25 year. I don't care on this one, but I care on this one, right? Attraction, building and improvements, right, which still have long time to go, from 20 to 40 years. Then I think, okay, this is pretty good in terms of the investment, right? So they don't have a major renovations or major buildings improvement based on their theme parks, right? So that's I'm happy on that side. Now the next thing to look into is the share repurchase, which I find, right? So in 2019, right, they secretly if I say, because the company did not purchase, made a public announcement that going to repurchase, and they have repurchased their share, right, from, look at here, right, from June to July, August and September to 131,643,1, right, shares they have purchased. And look at the price what they have at the average price during this period to around 142 to 141, and they go there and did some share repurchasing. Okay, and they did under the Walt Disney investment plan, right, open to the purchase under the open market, so it's there. And if I see from this, right, if I go there, what I'm trying to say here is there what I'm seeing, because if I go back to the Yahoo Finance, right, this is Yahoo, so this is the Disney ticker. Right now the Disney price is at right here 118, so they bought something somewhere over here, they bought very 142, and that's the average price, right? So some they bought it higher, some bought it lower. So when I come to this seems like, so before the dip, right, the Disney stocks was around 115, it's going around that much price, so they didn't realize, and then the stock dip. So look at here, so I have so Disney stocks since last March is already has grown and jumps, right? If I go little bit zoom in, you see it's grows going like, and it grows up to 118. So from 85 it's already gone quite well, but still have, if you want to go to 150, it has still a long runway to grow. Now the next thing is, Okay, so this is okay, this is there, but now my next question is what I'm thinking. Okay, what about the parks? When are the parks is opening, right? So that's one of my question. How much their bet when they compare to the Netflix, right? Is it will be eaten by Netflix, or they are doing pretty good on that, right? Because they have make a huge acquisitions, and they have some get some debt as well of that. But I'm less worried on that side if the company is able to generate revenue in multiple stream and that side. Okay, so let's say on the that. So let's say first I'll go and check the Disney and Netflix comparison. So here I find another good article, which is from CNBC. So in this one, what they have says, Disney has now 54.5 million subscribers, right? So this is from May 5 of 2020. So that's a lot of subscriber, right? And company has 33 point. So if on the Disney Plus, which is the recently launched in March 28, they have, as I also show in very detail, right? It has 33.5 subscriber. But look at here, right? I think I'll show you this quickly. So Disney says surpasses 50 million subscriber on April 8th, which up from its 33.5, right? So this is even latest, right? Look at from 28 to 50 million subscriber, right? So if I compare with the Netflix is in terms of the quarterly reports, right, is 182.9 million subscriber. But if you combine the Disney with 54.5, then Hulu 32.1, and then ESPN, which is another there under umbrella, right? 60% of this and ESPN, so they are here, almost little shy of 100 million subscribers. So that's a huge number of subscriber. And one thing I like to add here, because I recently did the Netflix video, right? Netflix unable to make organic revenue. Their cash flow from operation, if you see, it's quite significantly huge in negative. And you can see that video. It's not that long video, but on the, because the one of the major thing is their content is very costly. But on the flip side, on the Disney's, they are the content creator, right? And then they just open one more channel direct to consumer to provide that content. So this means their cost of that content for them is just one time, and then they are basically it's just a cream for them, right? So from the margin perspective, I think Disney has a smart edge and way ahead on this one. Is from the is very cost effective. That's what my opinion on that. And second thing is, kids are crazy on Disney content, right? They have Disney Channel, Disney movies, and especially, honestly speaking, I have 2 young kids, and I watch Disney movies with them, and I love Disney movie, either recently Aladdin or the other movies, right? Right, this movie is, sometimes you just forget the names, and even their shows and all, these are amazing, right? And Anna and all, right, those characters. So what I'm trying to say here is, this is the whole, I think Disney is coming with some ecosystems, right? Either you, for the entertainment, I think is a full big package. That's what I'm coming from, right? So Netflix is when it's only to one channel, one aspect of the entertainment, but Disney is the overall, the total package. You have the theme park, you have the cruise, then you have their movies, then it's streaming, then you, from the characters, you go and buy stuff for the kids, like on their bottles, lunch and all, and so on, right? So seems like where the Disney is going on the full entertainment, and I really like their Disney Plus. Haven't tried it, but I'm definitely going to try that, because Netflix is very limited in terms of, or even when I compare with Amazon Prime, I have the Amazon Prime, it's good, but then at least in Canada, right, I can say it's very limited in terms of the kids content. I didn't see much, at least in the base package, and I don't want to pay for extra services on top, right? So that's pretty much from my perspective. So in terms of opinion, I will say, yeah, one more thing I want to try before I'll close this video is this one. So this is another big plus, right? That Disney, they have just made the announcement, he's their CEO on the CNN, that on 11th of July, they're trying to open the Disney parks, theme parks, which is the very big news. And they say they're doing the clean. That's another story, that if people will go and visit those parks and all. But I think the way I see the people moving out and all, seems like it should be okay. I'll try to put those links in my description so you can check. Now, forming the opinion, I'll say what you think about it, right? I think Disney did a long marathon. It comes from the long. Okay, if I see from their theme park, that's very good. People like it. They are one of the best. If I see their movies, kid content, there is no comparison on it. It's one of the best. If I see that's one of their digital growth perspective, their innovation perspective, I think it's pretty good. They are doing both in terms of their organically launching it, but not only that, but they are also doing in acquisition as well, right? For sure, they had taken some debt on that one, but I saw that cash flow seems okay. But that's how usually you grow. In terms of the diversification, in terms of countries, we also have seen this there. And in terms of yeah, I also see that like in the Tata Sky and also directly indirectly, like sports, they're not only in the kids as well, but they are also in the documentary from Vice. They are in the sports, ESPN and all, their theme park. So it's trying to capture the different market and try. And I think at least from these other perspective, they are quite a leader in terms of kid contents and entertainment and that age group, right? And parents and all. So from all this perspective and the way the company is innovating, I think think the company is good in terms of the long-term perspective. Let me know what you think, and everybody has their different aspect of it. So kindly put your comments below, and if you like this video, kindly do like it, so Google algorithm will know people are liking it, and share to others, and kindly subscribe so most and more to my channel, so more and more, and ask your friends, family member to subscribe as well. So if my target is to reach 1,000 subscriber, and if you kindly subscribe it, I'll happy, and this way I assume you show your appreciations to it, and it helps me motivated to spend so much of the time. It takes a lot of time to go to this the content and produce this. Sorry, it's very long video today, but I think it's really worth it. So thanks for your time, and see you hopefully soon in the next video. And if you want me to cover any of your favorite stock, this one I covered for one of my friend, but and I like it, but put in the comments and I'll try to look into that as well. Thank you for now, and thanks.